We have seen a big gap up opening in the morning, and also what we have seen in the short time of trading today is that after the gap up there was a slight correction in the market, but once again the market has clawed back the lost ground, which also means that there is plenty of volatility in the market. The first signs are already here, and with that, Doctor, first question to you is, how does one play the volatility now that, we have a 250 point gap up on the Nifty itself?
Well, Jayesh, what changes right now is that with this upside gap open, I think the whole game of conjecture shifts from whether the NDA is going to come back to power to one of what will be the size of the majority with which they'll come out. So what will lead to is a little decrease in the volatility, because now there is more of a certainty that there will be a kind of continuity in the government, but still we should expect some volatility. And the way to deal with volatility first up is to stick with the large names, the ones which have large volumes, because when you have volatility you need to be able to get in and out quickly, so you can't really go into those small names however much you may like them. Second is to stick with stocks with pedigree and stocks with some news. I think those are the ones which will weather any kind of volatility. See, a small cap name can simply get hit down on both sides, whereas the larger ones will be a little more stable. Now, the third way will be to follow the main trend, and in the main trend, since it's been up and today it has got reaffirmed, the best thing to do would be to use intraday dips to kind of go long on any of the stocks. So I think if you follow this and follow just one strategy, there may still be people who are kind of bearish in this market also.
Yeah.
They should also stick to just one strategy, which is selling on rallies. But for the majority of the people, I think they should use the dips to buy.
Sure, and I believe that you also have an example to show on how to combat the volatility. If we can have that chart on the screen, the doctor will actually take us through on the chart that he is referring to, which I believe is on Titan, one of the strategies
Titan, yes,
that you have made.
See, what you have on the chart here is a superb trended move in Titan, and then if you take something very simple like a 50-day moving average, and then just take dips into that. So what does the moving average do? It tells you when the market has moved back into value from being overvalued. Now you can see here there are so many tests of the 50-day moving average, and if you have timed your purchase in line with that moving average, this is what is called buying the dips in a rising market. So two things to do: find out a stock which is into a nice uptrend, slap a moving average on it, 20, 25, 50, whatever fits, and then use those dips into it as a buying opportunity.
Now, Doctor, this is for the shorter term to combat the volatility, which is absolutely near term. But there's a longer term horizon as well, which investors and traders would want to focus on. Are there some stocks and charts that you have figured out which can be looked at from a slightly more longer term perspective as well?
Absolutely. I think when you're talking about a longer term, what you're really looking for are two things. One is clarity in the earnings across, let's say, the next 4 quarters or 8 quarters, and second is the presence of trend. The presence of a trend also validates the presence of active buyers in the stock. Now I think you have sufficient number of stocks which you can pick up where good quality of the stock is there and good pedigree, and there is news element. So one of the stocks which comes to my mind is something like Ultratech Cement. Now this is a stock which is valued highly, but then the very fact that the market values it highly tells you about the kind of confidence it enjoys. And if you look at the chart, Ultratech is just about staging a breakout to all-time new highs. So high valuation does not seem to be really worrying people. A similar such stock would be TCS, where I think the results recently has managed to up the stock's interest in the market, perk it up. And here again, if you look at the oscillators here, the oscillators have just drawn down into neutral, and they still maintain a bullish, let's say, bias, and they are just about to pick up. The highs are about to be exceeded. So I think TCS is something I would buy. The other stock I would look at maybe something like UPL. Now the results came on Friday, they were a little bit softish, but that will actually give you a pullback in which you can buy, because you can see that this is a stock which has been into a superb run upward. So there are many such stocks that you can look at where the pedigree is good, the business is good, the earnings clarity is very evident, and there is a trend in force, and there are breakouts happening, or they have made a pullback into, let's say, the neutral region. So I think these are stocks which would perform irrespective of what government comes in or what happens in the immediate future.
Sure. Thank you so much for your
My
valuable time. With that, it's back to you in the studio.